Here are the latest crypto news about the ETH merge, Bitcoin, inflation, Celsius network, regulation, top crypto performers, and more. With the latest Ethereum testnet achieved and the merge soft date moved up to September 15th by the developers, how will this affect ETH price and misconceptions about the upgrade? How are things looking for Bitcoin in the next stage of the market, price bottom, the battle of the bulls and the bears, and filtering the FUD? What should you be most aware of with the current inflation challenges that affect the crypto market, including insights from the Fed and bullish and bearish signals? When could crypto investor customers possibly recover their crypto assets from Celsius Network on the latest set of Chapter 11 court proceedings and other insights? What should you be most aware of with the evolving crypto regulations that affect the crypto market and investors and more? Top crypto performers, how are they performing, and what is on the horizon for them? All these important crypto news updates and insights coming up. This is Jason from League of Crypto Coin, where we share crypto education, news, and more. Watch this whole video for the whole update and Easter eggs, or use the video timestamps below for your preferred interests. Whether you know what it is and when the date it happens, or even if you don't know, I will give you important reminders followed by new updates you might not know in regards to the Ethereum merge or ETH merge. The Ethereum blockchain will make this highly anticipated transition from its current proof of work mining consensus to proof of stake. The ETH merge date has officially been moved and scheduled for September 15th. Now, this date is tentative in case of any delays due to technical issues found during test launch, bugs, code, etc. Many believe Ethereum is more susceptible to forced regulations and censorship. This stance would become more significant after the blockchain transitions from proof of work to proof of stake. Some investors, companies, and other organizations have their concerns with this ETH merge around the issue of censorship. Examples of this are like when we saw this happen with Tornado Cash, sanctioned countries, or if certain organizations wanted to censor or block certain individuals for a certain reason. Based on the concerns from ETH developers in a leaked ETH dev meeting, and even Vitalik himself, they have voiced their concerns around censorship and planned actions against censorship. Besides getting compliance from ETH validators, there are other areas of considerations to make with potential censorship. First, there's the area of most staking providers like Kraken Exchange, Coinbase Staked, Bitcoin Sushi, and Lido that may comply with the Office of Foreign Assets Control or OFAC's censorship and regulation against Ethereum. Despite those concerns, as a reminder to help protect against censorship better, Vitalik and other important parts of the Ethereum community said they would choose to have the burning of ETH staked tokens of any providers who censor transactions. On a positive note, the evolution of this ETH merge can spark another rally for ETH and other altcoins in the market as the ETH merge progresses. The data charts have shown that ETH is gradually catching up to Bitcoin or BTC. During market rallies, before and after FUD events, and recession period when Bitcoin hits closer to its original higher prices, ETH will hit closer to its original higher prices or more, potentially as well. The ETH merge in the market is important because even if this ETH merge becomes a buy the rumor, sell the news type of event, you have to look at the long-term effects. This ETH merge over time will show by example the strengths and weaknesses of these changes to investors, the ETH community, other altcoins, and more. Think about the current state of the blockchain for ETH or other crypto. Ethereum founder Vitalik Buterin said the scalability trilemma of decentralization, security, and scalability is a challenge for developers and tech experts. Currently, you can only have 2 out of the 3 characteristics. However, I'm very optimistic that with all the innovation and other changes in the near future, tech experts, developers, etc. will be able to come up with a solution for the scalability trilemma. Let's take a look at the bearish and bullish news on Bitcoin and what it means currently for short-term and long-term. As you may know or may not know, Bitcoin continues to affect the whole crypto market when it is up or down. Funny how that works, right? Despite the moves of the Fed, higher PCE, inflation, regulations, geopolitical tensions, other investment market effects, and other macro factors, experts and data charts over the years have shown the bear and bull rally times. This includes that Bitcoin prices fell every September over the last 5 years. The Fed has been raising rates and the absolute bottom is not in yet, despite some of the information out there for Bitcoin or other risk assets. On a positive note, this gives investors time to buy the dip of the dip and take profits along the way during bull rally comebacks. We are still under the 1-year moving average and would need things to move up more for moving averages, exchange inflows, more whales to accumulate, new addresses, and more to get a bull rally going again. In regards to the crypto fear and greed index, we are still in the fear territory. Other factors that will continue to affect Bitcoin and the rest of the crypto market are real estate market drops, China economy drops, goods and services market drops, and more. Social media search trends and content volume for Bitcoin has been a lot lower this month. The dollar index, aka Dixie, and Bitcoin correlation is still showing that when Dixie rises, Bitcoin falls. Altcoins are performing better than Bitcoin at this time as well. This is great for altcoins and not good for Bitcoin, obviously. Remember that the stock market is another important indicator on the bear and bull patterns of Bitcoin as well, unfortunately. As we can see that since the stock market has been down, so has Bitcoin. However, let's shift to the bull side of Bitcoin news insights and remember that what goes down must come up as well, or after a Bitcoin crypto winter comes a Bitcoin crypto spring. While there might be a lot of unfortunate news for Bitcoin, including the world overall, there has been a lot of bullish news on adoption of Bitcoin and crypto from more countries, certain banks, companies, and more. Due to the high cost of money remittances, inflation, and politics, developing countries will adopt Bitcoin or other crypto as a form of legal tender. A lot of other countries have been watching El Salvador's example in their serious consideration or action plans. More banks are offering Bitcoin, including U.S. commercial bank Sullivan, that now offers Bitcoin services to its clients. They have partnered with cryptocurrency exchange Bakkt Holdings to offer these services. Next, the world's largest crypto ATM company, Bitcoin Depot, is to go public via a SPAC deal. Another bullish milestone that brought increased awareness and potential adoption of NFTs, metaverse, crypto, and even Bitcoin is MTV's metaverse-inspired broadcast awards show performance from Eminem, Snoop Dogg, and their Bored Apes NFT characters. Quite the music video, quite the performance, I might say. Part of the crypto market's fall has been influenced by the Fed's rate hikes, goals to fight inflation, and Jerome Powell and Federal Reserve have taken an aggressive stand on inflation. Risk asset markets, including crypto, have been hit hard. During Jerome Powell's recent speech at Jackson Hole, he announced that the Federal Reserve's focus is to bring inflation back down to 2%. Whew, that's quite the goal there. Price stability is key, and the burden of heavy inflation is likely to fall on households and businesses. In response to Powell's speech, the crypto market, including Bitcoin, Ethereum, Solana, Cardano, Polkadot, Polygon, Avalanche, and more, were affected, as well as other risk assets. The Federal Reserve Chair, Jerome Powell, emphasized that restoring price stability through higher interest rates would increase pain for households, businesses, etc. I don't think anybody liked that when they heard that, but let's see how things go, right? $42 billion were wiped out of crypto market capitalization after his speech. Oh, how fun. As a market's participants prepare to take on the heavy burden of inflation. Restoring price stability is a challenge, and the Federal Reserve is ready to use the central bank's tools to forcefully bring demand and supply into a better balance. We'll see how that goes down. Based on these factors, they will continue to raise rates until they are sure that inflation has reduced back to the department's goal of 2%. Some of their inflation measurement metrics are the Personal Consumption Expenditures, or PCE, and Consumer Price Index monthly reports. If these numbers improve each month on these reports, then this could potentially get a market rally. Let's see how that turns out. Speaking of the crypto market getting hurt during inflation, most of us know that Celsius Network crypto lender and its customers were also hurt during this brutal bear market. Celsius Network filed Chapter 11 bankruptcy protections and has been dealing with creditors in court to plug its sinking ship. Now, Celsius has taken a strike back by opening up a pair of lawsuits against previous business partners. With the fall of crypto prices, Celsius's many bad financial moves with customers' assets and over-leveraged loans with DeFi protocols put Celsius in massive debt. Celsius and its customers had differing opinions on whether Celsius's plan to mine crypto to pay off its debts would actually work. Ultimately, a judge has ruled with Celsius, allowing it to tap its crypto mining subsidiary to generate money needed to reverse its bankruptcy. Celsius Network has dealt with issues out of the courtroom recently as well. First, DeFi aggregator KeFi started a lawsuit against Celsius back in early July. Apparently, Celsius had been giving investor funds to KeFi to invest in exchange for a portion of any profits. KeFi says that Celsius refused to keep its side of the deal. Then, Celsius struck back with a countersuit as well as another suit against a different partner. Celsius's countersuit against KeFi says that the company misrepresented itself to Celsius in its business deals, shady use of Tornado Cash to hide investment activity, false expertise, theft, and losing Celsius a high amount of money. During that lawsuit, Celsius has also struck back in yet another suit against crypto custodian Prime Trust. This suit alleges that Prime Trust is still holding on to $17 million worth of Celsius's assets, which it refuses to give back. After cutting off its deal with Celsius in June 2021, Prime Trust allegedly continues to keep those $17 million in assets that include nearly 400 Bitcoin, 200,000 Cell tokens, 2.2 million USD coin, and over 3,700 Ethereum. Wow. Celsius Network has also filed a motion with the U.S. Bankruptcy Court recently to allow customers with digital assets held in certain accounts to be withdrawn. However, the motion will apply to custody and withhold accounts and for custodied assets worth $7,575 or less in value. The way things go in court shows that this may not be the final outcome. A hearing on the motion is scheduled to be on October 6th this year. The plot thickens. Next is another important issue if you were affected as a customer by Celsius, and that is while legal proceedings continue, you have the option to file notice of claim in USD or wait until they update the legal form version to file notice of claim via crypto asset amount instead. Some investors or customers have already filed via USD form version, and others are waiting for the crypto asset version. Others are holding out both ways. Comment below which of these options are you choosing if you were a customer. The other important issue is when could crypto investor customers possibly recover their crypto assets back from Celsius Network? First off, I was affected along with many other customers in Celsius Network. Based on a lot of factors I'm seeing, it depends on which way things are progressing. For example, the following will affect whether customers will get nothing back, a little back, a sizable percentage back of their assets. We'll see how that turns out. This includes the crypto market at the time of final decision, Celsius's business model restructure plan, Bitcoin mining subsidiary, their revenue, additional investment or revenue sources, or asset adjustments and legal factors. In regards to crypto regulation news, here's the why and the what that has changed lately. As a reminder, being aware of the evolving crypto regulations that affect you, The crypto market, other investors, etc. are important because if we have more clarity and protections in place, then more retail and institutional investors will adopt crypto into their investment portfolio. This will potentially increase the prices and profits for more people. First up, still waiting, SEC delays VanEck's third Bitcoin spot ETF application. How many more applications are we going to keep going here, right? Something's fishy there. Anyway, recently, SEC Chair Gary Gensler says crypto is treated just like the market. However, 200 SEC lawsuits say otherwise. We'll see how that goes. Crypto businesses and investors and others have begged Congress and the SEC for clear rules for years, but it hasn't happened yet. Let's see if it ever happens. In the meantime, others have been taking action instead, like U.S. Senators Cynthia Lummis, Kristen Gillibrand, and several other senators that pushed back for legal bills to increase clarity. Major props to them, and we look forward to seeing more of that. Next, the UK Law Commission calls for separate crypto regulations as part of English property law. The Laws Commission consultation document has identified property rights as the right guidelines to handle the crypto assets category. Under the property right, holders of digital funds can take legal action to protect their assets. Next, Singapore regulator plans to expand scope of crypto regulations. The Monetary Authority of Singapore, aka MAS, said that some of the measures under consideration include requirements for mass regulated firms to obtain collateral when lending crypto, to conduct due diligence on their counterparties, and to comply with liquidity and risk-based capital rules. This is similar to requirements which financial institutions and traditional capital markets are subject to. Keep in mind that as each country implements laws that may hurt or help the crypto industry, that countries watch each other on what is working and not working. Some of them will model others or evolve or change these rules over time in good or bad direction. This can affect your investment decisions or research on certain cryptocurrencies, NFTs, companies, and more. Some of the top crypto performers that stood out recently were eCash, Huobi Token, Synthetics, Nexo, and Pancake. Starting with eCash, for example, eCash appears to be rallying due to its announcement of Avalanche Post Consensus that will go live on the eCash mainnet on September 14th, as well as other recent updates around its proof of stake. eCash price action got a nice price pump a while back, but close to the end of its recent gain streak, it went down in price again due to the overall crypto market decline, but will probably go up to a certain point due to the September 4th announcement. Next, Huobi token rallied as well due to the positive rankings about its crypto exchange growth and offering to sell majority stake to big backers. Then the price declined somewhat due to the Securities Commission of Malaysia recently putting crypto exchange Huobi on its investor alert list, stating the entity does not hold proper regulatory registration. However, Huobi is currently in discussions with Malaysian regulatory authorities regarding their presence in the Malaysian market. Next, Synthetics founder Kane Warwick said the Synthetics Improvement Proposal 120, or aka SIP 120, was key to the protocol's bullish momentum. It was the result of 1inch's integration with Atomic Swap's new exchange function. It allowed users to exchange synthetic assets without fee by pricing synths via Chainlink and Uniswap v3 oracles. The centralized derivatives protocol's volume spiked by 700% at that time, after fully integrating with 1inch for zero slippage trades. Then there's Nexo, whose Nexo token has rallied due to its booster leverage lending announcement and the team's announcement about Nexo 3.0. Support preparations for the impending Ethereum merge that bolstered token gains for Nexo as well influence. If the network is stable and has a high user value, Nexo will transfer the forked tokens into its users' accounts. The Nexo coin's value has risen due to these recent developments and more. Next is PancakeSwap, which has risen as well over the past few months due to Binance Labs, which purchased a significant stake in PancakeSwap's governance token, Cake. Other reasons are that PancakeSwap has listed more crypto tokens, including some related to the metaverse and gaming industry. This includes, for example, IBAT token of Battle Infinity Metaverse to play to earn battle games. Each of these types of developments for these top crypto performers have piqued some investors' interest. Now, my final thoughts on today's Legal Crypto Coin weekly crypto news. In the battle for your personal and financial freedom, I am optimistic for you and I long term as we see the evolution of all these crypto projects. I look forward to Ethereum's ETH merge so that the other crypto companies can see what to do and not to do as they improve their crypto solutions. Despite how legal tender is being used in different ways from different projects, Bitcoin's influence and use in developing countries changes the game and will bring about more world system changes if done the right way. That's the key point there. Inflation will continue to be a challenge long term globally. Let's just be real. However, if we stay focused on the right things, grow our wealth, and help others, then we can all thrive. Celsius Network lending platforms and centralized platforms and crypto scam projects have been a loud wake-up call for the importance of DeFi, not your keys, not your coin reminders, be wiser investors, and use of crypto hardware wallet self-custody. I can't emphasize that more than enough. Abuse of flawed regulation will hurt innovation and wealth potential for us. However, proper teamwork with regulators, retail and institutional investors, and more will have the crypto market flooded with more price gains, value, money, adoption, and potential wealth for us all if it's done right. Negative distractions, FUD, rising and falling crypto performers will come and go, but not if you think long-term perspective and keep growing. Now I want to hear your thoughts on these topics I've shared, so comment below. Be sure to hit that like button and subscribe to the channel if you have not already. Using my links down below, follow me on Telegram, Twitter, Instagram, and TikTok if you want additional insights, crypto updates, and other fun surprises coming soon. If you're still here, thank you. I look forward to sharing more content on crypto projects, reviews, crypto news, and more. See you again next time.